I'm Max Keiser. This is the Keiser Report. Well, you know, the world can't be too messed up if the farmers in France are protesting and dumping truckloads of manure on government buildings. You know, all right is in the world. In other news, Stacy.
Of course, the French farmers dumping manure in front of government buildings is something I do recall from the early days of Keiser Report and the early days of the last global financial crisis. So it could be a sign that everything is about to go kaboom. They're a leading indicator. Remember, we talked about the price signals that have been destroyed by intervention from the command and controllers. But this is a signal they cannot stop, and that's the French farmer.
No, the French farmer, when he's up and dumping manure on government buildings, you know things gonna go down.
It's going down, and Ponzi's go boom. That's our first headline. The SPAC market is in the process of detonating, and it will take the Ponzi sector with it. This is a piece written on wallstreet.com. SPACs are special purpose acquisition companies, and they involve these PIPEs, which are private investment in public equity. So there's, anytime you have more than one shell, when you're having to, Max used to be a magician in Times Square. And if you have to start doing all that sort of maneuver and moving these shares over there and that over there and this over there and that, but you, the shareholder, you, the retail person, are going to get rich, right? That's usually a sign that there's something going on. Well, this is arguing that the whole SPAC market, and last year in 2020, they went boom, they exploded in the amount. Just like in 1999, you saw a huge rush of IPOs in the dot-com bubble. Well, he's saying this is similar to that dot-com bubble where you have schemes of all these promoters and people pushing these SPACs, and they have insider shares that they get to dump. So he's saying that not only is the schedule of the unlocking of those shares by the insiders from 2020 now starting to unwind, so they're going to start dumping on the retail market, but also that interest rates, and this is where I think this guy is wrong on wallstreet.com. It's not Wolf Richter himself, but I think he's wrong that he thinks interest rates are going to go up, and therefore the whole Ponzi scheme will fall apart. But you and I believe that the Fed runs this biggest Ponzi scheme of all. So they can't let any of the Ponzi schemes fall, and they'll end up buying these SPAC shares as well.
Right, so it touches on two major themes there.
Yeah.
One, as you point out there with interest rates, that the low rates are constantly enabling a pipeline of fraud, right?
Yes.
So, and all the mistakes are responded to by either a bailout by the government or this extend and pretend. You repackage all the fraud and you increase the maturity at a lower coupon rate. That's been going on for 40 years. And you're right to compare it to the dot-com era is probably the closest antecedent to the SPAC fraud in terms of the dot-com's era when the dot-com bubble hit in the 90s and companies would go public with just a few shares. And Wall Street was complicit in creating these enormous first-day pops. And then the unlocked shares would appear and these stocks would crash, and the NASDAQ lost 85% of its value, over $5 trillion in the ensuing crash of NASDAQ. But then that led to the mortgage boom and bust of 2008 was a repeat of the dot-com crash, but repackaged. So the second major theme is that the Wall Street frauds going all the way back to the 20s, they're not different. They're repackaged, rebranded, and sold again. It's the same wine in a new bottle. So the SPAC fraud is just a variation on the dot-com fraud, which is a variation on the mortgage subprime fraud, which is a variation on the portfolio insurance fraud of 1987. All of these periods of fraud on Wall Street, enabled by the media, enabled by Washington, D.C., a trifecta of fraud. Remember, fraud is the underlying business model of America. If you remove fraud, the GDP would be negative 20%.
As you're pointing out, it all started during the dot-com boom, and also during that time, that boom was used to get rid of Glass-Steagall, to introduce the Commodities Futures Modernization Act, which enabled all the huge fraud on the quadrillions of dollars level in the derivatives market. But it also helped us export our jobs to China. So that's the underlying fraud in this situation, is that we don't manufacture anything here and we don't create much wealth. the companies like the tech giants don't have many employees, right? So they're not, they're just shuffling around. They're siphoning, they're scalping the economy for a few nickels here and there that adds up to billions of dollars over the year. But the fact is that that's the underlying situation, and that's why we keep on having these cycles of fraud, because they need to concoct a new one to generate an illusion of some sort of activity, a way to like get some of this money floating into the economy. So he points out like that this is similar to the dot-com bubble, and everybody keeps on using the same example. Like, yeah, none of these SPACs, none of these companies we're allegedly going public with, and most of it is under that whole ESG thing, which is like environmental and social justice sort of stuff that they're like feeding into that. Just like when we go to war, we never do it for the oil, we never do it for geopolitical imperial reasons. We do it to save the women and children. All the same sort of stuff on that. But the example that always gets pushed is Amazon. Well, Amazon lost money for years, and therefore we're going to make money just like Amazon. Last year there were 248 SPACs, and this year already in 2021, in the first quarter, there were 296. So he is saying, like, let's look back at the internet bubble. A VC firm would IPO 4 million shares at $20. The stock would open at 50, and at the end of the day, it would close at $100. Everyone chased it to get in. Then the brokers would upgrade it, and the CEO would go on television. With a 4 million share float, it was easy to manipulate the shares higher. Often the newly IPO'd company would level out well north of 100. A few weeks later, it was a virtuous cycle, and everyone played the game. What was left unsaid was that there was another 46 million shares held by management and VCs, and these shares would hit the market 180 days later.
In an era of no velocity of money, velocity is low, the fraud velocity is fast. Like these frauds have to come in fast. We know that the less than 20% of income for high net worth individuals and corporations in America is taxed. Roughly 80% is offshore. That's the real number. And so to keep that dodge going, you need a velocity of fraud. So the money laundering that goes on, if you can get from, let's say, a subprime mortgage-backed derivative package that was fraudulently sold by Goldman Sachs, and then that gets trotted in front of Congress and they're questioning it. While the questioning is going on, they're rushing into a SPAC, right? So they have to keep one step ahead of the law. And so this will blow up, of course, but within 6 months, there will be another major Ponzi fraud. It'll have another funny name, and that's that 80% of the money that goes completely untaxed and it's under the radar. It's not 20%, it's 80%. That's just the velocity of the fraud. And nevertheless, it does cause, they claim it's a victimless crime. However, when I look out and I see the homeless and the starving and the medically insecure in America dying on the streets, I would think that maybe those people are the victims.
Right. Well, how these SPACs operate, and they're kind of similar to the setup of the internet bubble and that collapse. And how that collapse happened is, as you said, once the shares of the insiders unlocked, which dwarfed the amount of shares that were floating on the market at the IPO, they had 10 times as much shares that they held versus the retail sector. So once they were able to sell it, they dumped en masse and, of course, crashed the market. So he believes we're at this sort of situation right now, where a typical SPAC deal involves a few $100 million raised for the SPAC trust. This is the only real float. Then a few $100 million more is raised for the PIPE. Remember, I said that was the private investment in public equity. These guys are buying at $10 because they plan to flip for a gain as soon as the registration statement becomes effective, which is often a few weeks after the deal closes. When a company merges with a SPAC, billions in newly printed shares are given to the former owners. Those shares start to unlock a few months later in various tranches. Finally, the promoters behind the SPAC get to sell. Of course, not all of these are fraudulent, but when you're having all these companies, these shell companies being merged into this and that, and instead of just like a company, like Amazon is a company and it has an office and it has a CEO and that's the guy, and he establishes a company and sets it up to sell books. That's what he started out online, and then you know what the entity is. Here, it's once they start introducing these things, a lot of fraud can enter it, and that's when you might find suspicious.
No, you
behavior.
can't compare it to Amazon. You compare it to the blind check pools of the 20s.
Yes.
That's what this is like, and similar to the dot-com crash.
Well, tell people what the blind check pools were.
Well, in the 20s, Wall Street would just float IPOs and companies with no business plan and just raise the money first, and then we'll think of something to do with the money second. So
it would be like company ABCD. They don't know what we're going to do yet.
Right, it's a blind check, blind pool. We don't know what the money's going to be used for. Same thing with these SPACs. Either A, they don't know what to do with the money. They have no business plan. So it's not like Amazon. That's a stupid comparison.
Mm-hmm.
Anyone who makes that comparison is an idiot. They raise the money with no business plan.
Mm-hmm.
Or number two, there's a company out there that has no business being a public company, would never pass muster with the SEC to become a public company. They reverse themselves into a SPAC and become a public company. So that's just, and remember, when these things start blowing up, we're going to have the flip side of the major fraud enabled by Jay Powell. They're going to use the 0% interest rate to buy back shares to keep this float.
Yes.
They'll do that, or they'll get a bailout from the government and the taxpayer.
They mentioned that happened to the dot-com bubble, where the banks that underwrote this whole thing, they bought stock in the open market actually to promote the price, to push it up, to continue the bubble. And yeah, so if this guy claims that this is only possible with 0% interest rates, in fact, negative real rates. So we have the negative real rates, and therefore the fact that these companies have no business model or business for the most part, like it enables this to happen. So
I mean, look, it's great if you can make the case that this is now allowing entrepreneurs to build businesses, but we know that it's just gutting the economy of economic vitality, causing massive poverty in America, violence, unrest, and a degradation of the country as a whole, losing respect. Mortality rates are going up. Infant mortality rates are going up because of this. It's not entrepreneurial. This is the financial disembowelment of the country by a few kleptocrats who are given free money and no morals or ethics to do whatever they want. And the results are what we see on the streets today. I mean, that's it. Now,
I want to point out that this, of course, is the end stage of just like what the cycle was in the 1920s. So we hollowed out over the 80s and 90s and 2000s through private equity, hollowed out the real economy, or the real manufacturing, the wealth-producing companies. They hollowed those out. And so now you have to create fictional companies to hollow out, because it's too hard to create a real company. It's going to get wiped out anyway by private equity. So you might as well invent a scheme to find the last few pennies available somewhere. It's just like there are homeless people all over right now, all over the place. When you go for a drive, there's a homeless person at every single street corner. And that's like these guys. These are like basically people begging you for money and shaking you down.
Nightmarish. We're going to take a break. When we come back, much more coming your way. Welcome back to the Keiser Report. I'm Max Keiser. Time now to go to Lawrence Lepard, independent investor, all-around nice guy, prolific Twitterer, and smart dude. Lawrence, welcome back.
Thanks, Max. Nice to be here.
Trillions have been printed since the pandemic began, and now Biden is promising another $4 trillion for infrastructure and even more trillions in stimulus, and yet gold is tumbling. Why?
Boy, it has to do with manipulation. It has to do with slightly rising real interest rates. And it has to do with the nature of this market and this game that, people run too hard in one direction, they run too hard in the other direction. It also has to do with a little bit of, the Bitcoin stealing the thunder. You can't deny that, and rightfully so. I mean, I look at them, I consider gold to be analog sound money and Bitcoin to be digital sound money. And they both play a role. They have different characteristics, but they both play a role in the end of fiat. And Bitcoin is hyperinflated, or the dollar has seen hyperinflation here. I think it's kind of amazing. Hyperinflation is defined as 50% a month, move in inflation, and we achieved that in Bitcoin in December and then again in March. So I think a lot of people who are in the sound money camp are putting their excess dollars into Bitcoin. Gold's kind of been ignored, but I don't think it's going to last. I mean, I think Bitcoin can continue going higher, but I think this gold correction is just about over. And I'm very bullish on where it's going to go.
Gold has become the poor man's Bitcoin.
Right.
Maybe if Bitcoin gets hard to buy because all the coins are being scooped up from the miners by the big institutional players, people may have to resort to buying gold to protect themselves against inflation is kind of go slumming in the gold market. Do you think that'll help gold?
Yeah, possibly. I mean, it's, they're different, right? I mean, and they're both great. I love them both. I own a lot of both. One thing I do think that some of the Bitcoiners who are younger, and I get accused of being, an older guy. I'm 63. I think one of the things that the younger Bitcoiners are missing is just how evil the other side is here, and how they're likely to change the rules of the game on us at some point. They did it to the Hunt brothers. They did it to me on September 23 in 2008. They eliminated short selling of financials. They've done it at various points in time. They did it on the GameStop thing. And, the notion, I mean, look, I own a ton of Bitcoin and I think it's going to win. And I think it's beyond attack. Having said that, I think there could come a time when the government could take some swipes at it. And I don't think those would be particularly good for the price. And so, I think young people who say, oh, I got to be Bitcoin, 100% Bitcoin, from my point of view, that's not sound money management. You want to have diversity. You want to recognize that all these things are just based on probabilities, not certainties. And so to be 100% Bitcoin, zero gold is, in my view, a mistake, because I think, it's going to swing back and forth is my estimation of how it unfolds.
That's true. I suppose that the government might come looking for Bitcoin. But of course, it could be interpreted that Bitcoin is out there stalking the government. It's like file swapping back in the 90s with the introduction of Napster, and then the subsequent generations of file swapping with BitTorrent, et cetera. It totally destroyed the recording industry as we know it. And they had to reinvent themselves as streaming music services at a subscription. This is doing the same thing to banks and central banks. It will utterly destroy these institutions forever. They'll never coming back. And we're going to have a new business model based on Bitcoin. The sooner people wake up to that, the better. I mean, otherwise, the pain is going to be really hard for people like Ray Dalio, who just, he got one foot in Bitcoin and one foot in, Jay Powell's back pocket, Leonard.
I agree. And look, I don't dispute that point of view, Max. In fact, I'm very much aligned with that point of view. I think the only point I'm trying to make is that some of the young people who are piling into Bitcoin, are not aware or not thinking through, if they can hodl all the way through an 80% drawdown, great. They'll be fine in the longer term. But, think of those people who bought it, 18,000 in 2017 and they didn't hodl. And so my point is just that, as an investment manager and as somebody who's looking at advising people, yes, it could be the fastest running horse, but it's also a volatile horse. And you have to understand, I mean, when people say, hey, you should be 100% Bitcoin and nothing else, that you're exposing yourself to the risk of a drawdown that might shake out somebody who doesn't have the understanding of it that you have, or that I have. I mean, when that drawdown occurred, I doubled down. But some people are just price chasing it because it's the new money. They may not be in a position to do that, or they may not be strong enough to hang on through the downturn. But I don't disagree with your conclusion about where we're going to be. I think it takes some time.
Let's talk about inflation because, people have been buying gold and Bitcoin because of inflation. The Fed is reporting CPI is 1.4%. What? Yeah. You sent me a chart suggesting they are lying. Lawrence, what's going on here?
This is beyond a sick joke. I mean, it's just, it's so funny. It's like, how can you tell they're lying? The lips are moving. It's Pravda kind of stuff. The price of absolutely everything is going up at, many cases, high double-digit rates, And so, it's only a matter of time until the bond market wakes up to that. And then, of course, the whole thing unravels and hard money wins. So, I don't know what to say, but to say I watched Powell's narrative or his speeches in front of Congress carefully, and it was amazing to me that he takes the view. I mean, first of all, they're conditioning us, right? He says, yes, inflation is coming, and that doesn't surprise them, and so they want us not to be surprised. But the new code word that they're using is it's transitory. It's all related to supply chain issues, associated with the COVID crisis, and certainly there is some of that. I mean, you look at the lumber prices and what happened to some of the lumber mills and stuff, and that explains a piece of it, but it doesn't explain all of it across every single category. I mean, there's almost nothing that has decreased or is only inflated at 1.4% in the last year. So I don't know how the government gets to those numbers. I mean, I kind of do, they use hedonics, et cetera, but it's just a lie. It's a blatant lie, and people know it. And thus they're protecting themselves by moving, by in Gresham's law-like effort to move into sound money.
If you do the numbers and you include in the CPI, you include things like education, health, and housing, then the actual inflation rate is 10% to 12%.
Easily.
Right?
Yeah.
Now,
right.
Going back to 17, and inflation is a tax, right? It's a stealth tax. And going back to 1776, there was a phrase, no taxation without representation, I believe.
Right.
And so who voted for this? Who voted for this inflation? I don't get it. Where's my representative in government? Or we got tyrants? This is what we were warned about 200 and something years ago, Lawrence. We've got tyrants back. What are we going to do?
Look, I mean, we're going to hope that the sound money system, the sound money alternatives bring this whole crooked system down. I mean, the system is so broken. We all know it. I mean, a perfect example of this, in my view, is if you poll the American people, 80% will say they want term limits. Now, if we're a representative democracy and 80% of the democracy wants something, why can't we get it? Well, it's simple. We can't get it because the people who hold the offices don't want to be threatened in their power in those offices. And so the system is clearly broken. We can all see it. And the fourth turning will fix that. And I think that, the sound money movement is probably the best lever we have to bring this broken system down and then to reform it. And, I think that's what led to the meme of Bitcoin fixes this, because indeed, these guys have power because they can print money and they get a benefit from the cotillion effect. And if we take that away from them, they won't have power anymore. There are a lot more of us than there are of them. And that's the weakness in their in the scheme that they're running. And so it's going to catch up to them. And you can just see it coming.
Let's talk about Stan Druckenmiller for a second. He's very, very short the U.S. dollar, mainly because of the 25% increase in money supply. So that's a losing trade. Stan Druckenmiller hasn't had a down year since 1981. 2021 could be the big down year for Stan. He's long gold. He's short the dollar. He's getting crushed. What do you think?
I don't know. I don't deal much in the currencies. And to me, they're all, the dollar versus other currencies. I mean, they're all fiat, right? So I see all this, milkshake talk and other views on Twitter as to where the dollar ought to go. I don't have a clue. I've never really traded the currencies, except insofar as what I consider the ultimate currency, which is gold, and the emerging ultimate currency, which is Bitcoin. So, Druckenmiller's a smart guy, no doubt, and he may be right. The timing on the dollar is tricky for sure.
Yeah, tricky, I'll say.
Right.
You got a 10-year Treasury yield spiked a little bit a few weeks ago. Now it's kind of going sideways. But a lot of, like Bank of America is saying that the 40-year bull market in bonds is over. That's a widowmaker. That's a trade that's put a lot of people in the financial money management cemetery over the past 10 years. But is the 40-year bull market in bonds over, Lawrence? You want to take a stab at that? It could be.
Yeah, sure. I mean, that's a great question. Let's go back to the premise that the bond market is actually a market, right? I mean, the bond market's not really a market. The bond market's a government signaling mechanism, as best I can tell. So, you want to know if the 40-year bull in bond markets is over, ask what the Fed and the Treasury are going to do. I mean, it should be over. It should have been over long ago, but it's not. And the reason is we know who the ultimate buyer is, right? And that's how this all ends, right? I mean, the bond frog is sitting there getting boiled and is saying, okay, you're giving me, 170 on a 10-year, and meanwhile, inflation is raging. It's something between 2 and 10%. I'm getting totally cooked. I'm losing a ton of my purchasing power over the 10-year hold period of that. I want out of here. I'm going to sell this bond and go buy some Bitcoin or some gold or some stocks even, just because, hey, at least they move up and they are allowed to move up, unlike gold. And so, the Fed then is going to be forced to buy them, and then that's going to show up on their balance sheet. And eventually, I mean, Max, this, you've been talking about for years. You were, an OG in the whole area. Eventually, this emperor is going to be naked, right? I mean, this fiat emperor is going to be completely naked. Everyone's going to know that they're, the vast majority will conclude that they are lying through their teeth about what they're doing to the monetary system and about inflation. and they're going to behave like rational human beings. They're going to protect themselves. And so you get your crack up boom, right? I mean, that's why housing prices are up 10% year on year. That's why houses are having multiple bids over ads. That's why, I went out to look at a car the other day. Car prices are shooting up. I mean, it's nuts. It's absolutely nuts. And it's because, a $40,000 car is more valuable than $40,000 in the bank, because guess what? That car is going to cost a lot more in 3 years.
All right, we're going to cut it there and have you continue this in a second segment. Thanks for being on the Keiser Report, Lawrence.
Thanks, Max. Thanks for having me.
Okay, and that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. Want to thank our guest, Lawrence Lepard. Until next time, bye, y'all.